Yeah, I think when we say that, we set out our strategy about 2.5, 3 years ago, and we were very clear where we wanted to grow and how we wanted to grow. And I think the pleasing part of these results is that as a continuation of last year, we grew in the exact areas that we wanted, and that's when we talk about expectations. So areas like our corporate business in South Africa having the 4th year in a row of double-digit revenue growth, our growth in markets outside South Africa, growth in corporates outside South Africa. So all the areas that we were focusing on grew. So I think that was very important to us around it. And then particularly on the cost side, I think we've been very strong on our cost management over a number of years. We continued that trend, but once again in exactly the areas that we talked about. So I think when we talk about in line with expectations, that's what we refer to. So what we were trying to point out in the WIMI business, our wealth and investment management and insurance business, was to highlight the fact that we had revised reserving requirements, actuarial valuations across Africa, where we increased our reserving. And the second area is that business is quite impacted by the investment markets. So if you remember, the Brexit vote was pretty close to the end of June. And so with that whole Brexit, the markets took a bit of a downturn, and the Africa Fund, which is an investment fund, had a downturn. So if you took those two areas out, the underlying business was actually up around 9%. So once again, it was growing in exactly the areas that we could control. Yeah, so I think we're trying to make it very clear these things it was in line with our expectations. We knew this was coming. Interest rates have been turning upwards for a while now. So there's no surprises. I think on the good side for the unsecured, it's probably a little bit more resilient than we thought at one point. But we've been very cautious about how we've been growing our unsecured book over the past 3 to 4 years. So we're very pleased with that outcome. But I think we do expect, we know there's one more interest rate hike coming, or even if there's none, the consumer pressure is probably going to stay there for a while, particularly with low GDP growth, unemployment growing, in areas like that. When does the drought turn? So there's a lot of factors that we have to watch in South Africa at the moment that I think will affect the consumer for quite a medium-term picture. So what we've indicated is we're expecting improvement in the second half, because in our first half we took also a large single-name impairment in our corporate and investment bank. And in addition to that, we increased our portfolio provisions. Our portfolio provisions is the highest they've been in over a decade, our sort of macroeconomic overlays in our estimation of what's going to happen in the future. So those are unlikely to repeat, and therefore we should see some improvement in half two. So I think, as highlighted, you've got, although we talk about the lowest outside South Africa growth or in our presence countries since 2002, it's still 4.2% GDP growth. So the countries we're in are still growing, but with commodity pressure, etc., it's probably slower than what it was a few years ago. So we still see growth in those countries. I think I've also learned over the last few years as being an FD to try and predict macroeconomic indicators is almost impossible. So what we think GDP growth is going to be and interest rates are going to be are probably impossible to predict. But I think there is a general trend that in South Africa we are going to go through tough times, economic growth, whether you call it minus or close to zero, it's going to be in that area. But the great thing about our business is we've got so many pockets of growth, even in tough economic times. So all the areas I highlighted earlier in the conversation, we still think we have growth opportunities in our corporate business in South Africa, even in tough economic times. We still think we've got growth in our markets business outside South Africa. So pretty much any part of our business that you touch, we still think we've got growth opportunities despite tough economic times. But saying that, what we did try to highlight in our results is as we go into the second half of 2016 and 2017, when your retail balance sheet is not growing fast, it will have an impact on earnings and make the environment tougher for us. So nothing more than Maria said in her talk. I think what we highlighted is we're in continuous discussions with them around the separation, and we're in discussions with all regulators because it requires regulatory approvals. So it's a complex issue that's going to take time to resolve, and we'll update the market when we've actually got some factual things to update the market on.